All right, joining us now on the stock side, we have Dennis Gartman, editor and publisher of the Gartman Letter. We have Ken Hebner again. We have Peter Schiff again, are still with us. We lost one casualty down in Fort Worth. Maybe we'll get LeCamp back or not. Dennis Gartman, God, I love reading your newsletter every single morning. Let's do a quick whip around. Does the Fed action today, Dennis, guarantee, as much as anything can be guaranteed, that November 20 was the bottom in stocks?
I think it does, Larry. I think they've done exactly what they needed to do. I understand the concerns that they may be a bit overstimulative. I know that Peter Schiff is not going to like that comment, but yes, I think they've put a bottom into the market, and I think they've guaranteed that the October and the November lows are now finite and will not be taken out.
All right, Peter Schiff, it's the one thing I didn't ask you in the Fed segment. Is there a stock market bottom now?
I doubt it. But even if there is a nominal new low here, there is not a real new low. If you price the Dow in gold, if you look at where it is right now, the Dow is barely worth 10 ounces of gold. We're right on the lows for the move. My guess is by next year, the Dow is going to trade down to only 7 ounces of gold, maybe even 5 ounces of gold. That would be a 50% decline in the real value of U.S. stocks priced in gold. Who cares what happens priced in dollars? Right. Because we're putting those into oblivion.
All right,
I live in dollars.
And
not for long.
Let me get my friend Ken Hebner. Ken, again, this is a whip around. We're going to come back. You mentioned in the earlier segment when we soloed you, you like financials and insurance. Ken, just real quick, the second-rated group today, which did very well, was basic materials, commodities, and the third was consumer discretionary retailers. A quick comment. Basic materials, Ken.
Okay, I think that the global recession is going to take us to levels where we have a surplus of commodities for several years. Commodity stocks, including oil, are not attractive.
And retailers. How about retailers? If you're right on commodities, Ken, let's assume commodities keep falling. We've seen a tremendous retail gasoline drop, which is very bullish for consumers. Would you buy retailers and consumer discretionary?
Well, I think a year from now, the consumer is going to be growing. Consumer spending will be rising in the year 2010. It could even happen before that.
All right.
So there will be opportunities in retailers.
It's all going to be for food and energy, though.
All right, hang on. We're going to come back. I got to jump. We're going to come right back. Please stay where you are. I want to walk through some of these key groups. I want to walk through some of the logic. And I want to ask, by the way, does anyone want to cut tax rates? This is all demand-side stimulus, big government stuff. That doesn't produce productivity or growth or investment. CNBC reports coming right back. I'm Larry Kudlow. Straight ahead.